Owner's equity, remember a negative asset, the more the negative asset become, the less your assets become. So it is minus 184 because the provision for bad debts become more. This is the B account. This is the nominal account. The one with the word adjustment is the nominal account. So your negative asset become more. That makes your assets less. Your expenses, provision for bad debts adjustment. Your expense become more, and that gives you a minus 184 in your owner's equity because of more expenses. Another one, provision for bad debts as an income. You've got your debtors there. Can I quickly go back? The prediction of debtors that can become bad in the future are more because of that expense. And now the prediction of debtors that can become bad in the future are less. They are less. Okay, let's put in our balance there for the debtors control. We've got a balance on the last of the year, February 28, balance brought down 21,000 rand, 21,000 rand, and our provision for bad debts, is 900 rand. 2019 February 28 on the plus side, balance brought down 900 rand. Balance brought down 900 rand. Provision for bad debt should be adjusted to 4% of the outstanding debtors. 4% of the outstanding debtors. 4% of 21,000 rand gives us, you put on your calculator, 21,000 times 4%. That gives us 840 rand. 840 rand. We are at the moment on 900 rand. Can you put something on the credit side so that that 900 rand can become 840? No. You must put the difference. 900 minus 840. You must put that 60 rand on the debit side. And if you put it on the debit side of the B account, then we are going to put it on the credit side of the nominal account. On the credit side of the nominal account. Remember, we are not going to do anything to the debtors. Can you see that? Not in this case. Because they don't tell us anything about the debtors. They only gave us the balance there. Okay, so what's going to happen now? The 900 rand must become less so that it can become 840. So for the 840 there, okay, don't forget about that one because that is a balance. There you put the end of the year provision for bad debts. Remember, adjustment, the nominal account. And on this side, you put at the end of the year provision for bad debts. And this one will go to the profit and loss account as 60 rand. Last of the year, profit and loss account as 60 rand. So this is an income for the business. The moment that this adjustment, the plus turned to the other side, the adjustment, sorry, now you can turn it to the other side. Now it's an income. Why is it an income for the business? Just because of that. The provision that we made last year was too much. So the moment that you work out your 4% of your debtors, you put that amount in there. and then you subtract the 60 Rand, and this 60 Rand is an income for the business. Remember, this is a negative asset, so your assets is, the negative asset become less. The negative asset become less. So if your provision for bad debts, the B account become less, then there's a plus 60 there. There's also a plus 60 there because provision for bad debts adjustment, the nominal account, is an income for the business. I know that our time is almost over, but I've got 4 more to do, so let's quickly concentrate on this one. Interest on loan capitalized is an expense for the business. Interest on loan capitalized make the loan more. It make the loan more, and no money was paid because we capitalized the interest. There's your loan statement. The bank is going to send you a loan statement. It will look like this, and you are going to use this to do your loan account. There's your loan account. You put the balance there, and that balance was on the first day of the year, and they mention it there. Balance of the loan on the 1st of March 2018. That was a balance brought down of 250,000 Rand. 250,000 Rand. The interest that you capitalize, you put there on the last day of the year, interest on loan. That's a GJ transaction, and you put the 18,000 there. You put that interest on the debit side of interest on loan, last day of the year, and you put the loan AB Bank. So you capitalize the interest, you don't pay the interest. There was payments. During the year you pay like 2,000 Rand per month, so there was a bank amount, CPJ, that you paid of 24,000 Rand. So now you can see that you can basically calculate the balance of your loan all by yourself. So when you receive the loan statement, they are going to put a question mark in there. Don't worry. It is 250,000 plus the 18 that we capitalized. That gives us 268. 268 there, 268,000 minus 24,000 gives us 244,000, and that is your new balance carried down. First of the year, brought down 244, and that amount was given in your loan statement. So if they put question marks in there, you just work it out for yourself. Interest on fixed deposit capitalized, it means that your fixed deposit become more, and we don't receive any money. Sorry, can I quickly do this one? I'm in a hurry now. The 18,000 Rand will close off to profit and loss. 18,000. So it is more interest on loan. Interest on loan is an expense, so that becomes more. So there's a minus 18 there. And your loan become more, so there's a plus 18,000 there. The interest on fixed deposit, capitalized. There's your fixed deposit. You've got a fixed deposit with DISA Bank. Okay, they don't give us the amount there. I'm going to put a balance in there. I'm going to put a balance in there on the credit side of the fixed deposit. On the last of the year, February 28, there's a balance there of, let's say, 50,000 Rand. That is the amount that we put on a fixed deposit. And they capitalize the interest. So the interest make your fixed deposit more. Sorry. You see, now I'm not concentrating. The plus is on this side. So the balance is on this side. Balance brought down 50,000. The interest will make your fixed deposit more, 5620, and your interest on fixed deposit, which is an income for the business. Fixed deposit, DSA Bank, GJ 5620, and interest on fixed deposit 5620. This will close off to the profit and loss on the last of the year. Closing transfer 5620. It's an income for the business. It's an income for the business. And what happened? Your assets become more because your fixed deposit become more. Your owner's equity become more because your interest on fixed deposit become more. Grade 12s, I also want to do the adjustment for income tax and for dividends, but I think I'm going to do that next week when we are going to do the final accounts. So if I can quickly go back to my thing there. Just a moment. I just want to show you quickly that we done, I think it was 17 adjustments today. There you are. We start with the trading stock deficit, and the ones that is highlighted there are the temporary accounts, and we end with the interest on the fixed deposit that we capitalized. I really hope that this helped you today. Go through it again. Concentrate, ask yourself, are you going to add or subtract? Is it an income or an expense for the business? Is it an asset, maybe a negative asset, a liability? There's a lot of things. So please concentrate when you're busy doing adjustments and practice, practice, practice. Because practice makes perfect. Have a nice week and see you next week. Bye-bye.